right, today I have the absolute pleasure of being joined by Robert from Affinity Home Mortgage.
It's a pleasure to be here, Maddie.
Thank you so much for coming.
Yep.
So today we're going to go over some common questions and really just go over the whole loan process. What type of mortgage would be best for a first-time home buyer?
Yeah, so it's really on a case-by-case basis, and I kind of want to just give some examples. So for a buyer that's like a 740 credit score that has a substantial amount of funds in the bank, the best product for that kind of buyer would be the conventional loan product, the conventional Fannie Mae, Freddie Mac loan. Mm-hmm. Now, for a buyer that's more challenged in their finances, let's say a buyer that has like a 620 credit score, it has, let's say, $10,000 or $15,000 in the bank, their funds are very limited, an FHA loan would be the best product for that type of buyer. So in the LA area, I mean, it really depends. Any sort of product works, but it really comes down to what the buyer's financial profile looks like. Mm-hmm. And yeah, I mean, those are really, it's either a conventional loan or FHA loan. Those are really the most popular loans for any first-time home buyer.
Okay, great. Can we use funds from somebody that is not in the transaction?
Yep, exactly. So that's another misconception, is that buyers think that, just because they have a relative or somebody that's not involved in the transaction, you can certainly use what's called gift funds from somebody that's not directly involved in the transaction. So that could be somebody like a cousin or an uncle or a mother or even a close friend. Especially for FHA loans, they allow for close friends to give you gift funds for the down payment or closing costs. So yes, you can absolutely use what's called the gift funds from anybody in your circle, anybody in your bloodline. So.
The next question, what is the most underutilized type of loan that people are unaware of?
Yeah, so I would say unequivocally is the bank statement program. And it goes back to a lot of buyers are just, some of them are not filing their tax returns, or their tax returns are underreported income. And again, it goes back to a lot of the self-employed buyers that are writing off a lot on their tax returns. The bank statement program is really underutilized, and it's one of the most underrated programs. Mm-hmm. Despite the rate, it's a little bit higher than a conventional loan, but it's still a really good product for somebody that's looking to get a loan and that can't qualify with conventional documents.
And what is your average loan processing time?
Yeah, great question. So typical mortgage companies, they take about 2 to 3 days to actually process the loan and get somebody fully pre-approved. With us, it actually takes about 30 minutes to an hour, because with me specifically, I actually work directly with the client. I usually get all their documents up front, and it takes me about 20 to 30 minutes to really analyze all the documents. Mm-hmm. And if it's a little bit of a more difficult profile that needs more analyzing, it'll take me up to an hour. So it's relatively quick. So I'd say safe bet would be 30 minutes to an hour to get somebody pre-approved and into a loan.
Nice.
Mm-hmm. Yeah.
Okay, the final question that I have for you.
Yeah.
What do you see happening with rates? What do you forecast them in the future, the next 6 months to a year?
Yeah. So this is the big question. This is what everybody's kind of asking about. I would say, just based on my observation, is I think the rates are pretty much they're at its highest. They're at its peak right now. They're hovering around 5%, and the reason being is the Fed is deliberately doing this to lower the prices of the home, because especially in LA, they're so inflated. So their theory is if we increase the rates, that's going to drop the prices. So what I'm anticipating going down the line this year is, in a few months, I think the rates are going to go down, and I think the prices of the homes will first go down, and then the rates will follow. So I think the rates are going to level off at about 3.5 to 4% going into the summer and fall, and they won't stay this high. So they're currently at 5%. Okay. So I think they're going to go down overall.
Nice.
Mm-hmm.
Well, that's all I have. Thank you so much, Robert. It's been a pleasure.
Thank you for having me, Maddie. I appreciate it.